Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. I wanted to give you a weekly update today on the open buy recommendations that I currently have, and I'm going to present them in order of uh, the most attractive today to the least attractive today. And maybe that'd be helpful if I do this during market hours. So let's get into it. Okay. So, I think the most attractive thing that I've been buying today and will continue to buy if it falls further is Reits, real estate investment trusts. And the three that I suggested, I think all three look attractive. IYR is the uh, broad-based ETF that has, I don't know, 100 REITs in the index. So you get diversification with that. And so you can see it's fallen from about 103 to 99. And the price projection of this inverse head and shoulders here is 112. So we still got good upside. You still got a dividend. And I think it's a good holding that should continue to outperform like it did in the third quarter. Third quarter, utilities and REITs were the best performing asset classes. They're getting hit today because interest rates are going up because the jobs report was strong. But I think we'll see some other economic data on inflation that's going to show that it's slowed over the last month or so, even though I don't think that's a continuing trend. I expect to see that accelerate into year end. But there should be, I think today with the jobs report, the sell off in the rise in interest rates, the sell off in bonds, and the sell off in REITs and utilities is probably overdone. So, suggesting IYR, suggesting national retail properties. They own, you know, strip mall real estate that has people like Starbucks and solid big tenants, national tenants. And again, this has sold off a little bit, hasn't sold off as much as the overall index. And this week it's down, I don't know, 1.2%. But again, these have been the big outperformers and I think they will continue. This has also not hit its price projection. American homes and rent. This is a little bit different. And again, this has a big inverse head and shoulders pattern. I actually took the right shoulder symmetric ascending triangle, flat resistance line, upward sloping support line, and our price projection on that, it gives us a more conservative price projection than the inverse head and shoulders of 46. So we're currently at about 38, let's call it. So still good upside here. And I'm still suggesting the REIT space. The new recommendation that I came out with a few days ago, the physical platinum ETF, PPLT. And this is kind of big picture stuff, the big triangle that's 1, 2, 3 years in the making. It's not intact. It is not broken out yet, but it's forming. And so what I did was go down and look at by the time it breaks out of this at 100, it's going to be overbought. And the thinking here is platinum has not participated. It's been in this sideways consolidation over the last few years, whereas gold and silver and copper have broken out. Platinum has not, and I think that's coming. So I expect metals to continue to do well. It's just that gold, silver, and copper, the sentiment is super, super bullish, which makes me nervous. most likely a correction's coming in those metals before you can see substantially more upside. So, but this is one that I think is kind of under the radar screen. So let's just take a look at this small part going back to, I don't know, let's call it May, and see if we can't find a bullish pattern on a shorter term basis. And here we have an inverse head and shoulders on the daily chart. The left shoulder, the head, and now we're trying to form a right shoulder, hopefully. And I recommended that on this dip, and we got a couple up days, and now we've had a couple days of a pullback. When I initiated with a buy on this, I said, the right shoulder doesn't look totally developed yet. We'll probably bounce around here for a few days. This took I think like 15 days to form the left shoulder. And we've got one, two, three, four, five, six, seven here. So it doesn't have to be exact, but maybe 3 or 4 more days before we see a breakout. And if we could get a breakout above 93.50, our price projection is 104, which is, 15% higher than where we're at. So I'm trying to get in early. I did the same thing on China, and I think the gold miners I did that on. So it's just a little bit different strategy than traditional technical analysis. I'm looking at smaller patterns to get me involved in bigger consolidations early. The next one in order that I would suggest is Marathon Oil. Now it's having a huge up week along with all energy stocks. The rest of the recommendations we're chasing a little bit, except for bonds. But this is just trying to break out of a small consolidation after breaking out of a huge consolidation. And the upside is really, really big, and our reward to risk is still favorable. On the last update I did, I said that a week ago, I said Marathon Oil had the best reward to risk setup, and it was one of my top recommendations. I think it was number 2 behind Reits, and so it's still up there, even with this big up move. Uh, you know, uh, I wouldn't go in and buy a full position today, but you might want to get involved, and then on pullbacks, you want to add and do the necessary portfolio management things that need to be done. So still like Marathon Oil. It's got huge upside. We're looking at 60 on the upside here. So gold miners would be the next. The reason why gold miners it's had a down week. I could have put this a little bit higher, but the pattern, the big inverse head and shoulders pattern, this is a monster 4-year pattern. It's suggesting 50. We're at 40, even with this pullback. So the reward to risk isn't real favorable. I may move up our stop here to say 36 or so, just to lock in some gains. But what I don't like is all these higher highs in price. We're getting lower highs on our relative strength index, suggesting that a change of trend is coming. It'd be nice if we got some sort of a spike here and kind of got up closer to our price projection before going neutral. So I'm going to monitor this a little tighter. TLT, so fixed income, having a really tough week, and most of it's due to today. The big jobs report brings into question whether the Fed is really going to be able to cut rates. And in fact, will they have to raise rates? So I don't think that's going to happen. So anyway, I think this is a little bit overdone. But again, this is something I'd really like to be able to move my stop up to, but I can't really find a good place. So that's why it's a little farther down on the list. The pattern, the big inverse head and shoulders pattern here is suggesting 115, which is a long way up. So I am still recommending it. I'm nibbling at it. I'm buying more of 5 and 10-year treasuries as opposed to 20 because they don't go up or down as fast and as much. So IEI is a 5-year ETF and IEF is a 10-year ETF. And their patterns look good just like this. So on a big down week like this, I've been nibbling at those shorter maturity treasury ETFs. I just wanted to point out oil, it was one of my recommendations that I got stopped out of here. It's now back above. But it still hasn't really broken out. We're kind of in no man's land at this point. However, I am, energy stocks are breaking out. If you look at XLE, you look at, which is energy ETF, it has 100 energy names in it. You look at FXN, you look at some of these other names, they definitely look bullish. It makes you think that eventually oil will break out, but I got to read the chart the way I'm reading the chart. The oil ETFs have actually slightly broken out, but this is the one that matters. Now, this does not include today. I'm guessing that oil currently is at, well, I'll tell you what it's at. It's at 75.34. So it's right about here. So again, we don't have a breakout. And so I'm just going to stay neutral. Why I'm pointing this out is if oil breaks out, that would be really inflationary, and you would see interest rates go up, and you would see bonds go down, and you would see some of those things happen. But after a 8% move including today, you're over 9% move in the week. You know, uh, it could be overdone. So I'm just pointing out that. And the last recommendation that I have that's open and everybody's interested in is China, FXI, which we got involved in at a much lower level back here. And my advice has been on up days like today, oil's up, FXI is up 3%. It just hit a slightly higher high. I'd be selling a little bit. And then, like 2 days ago, when we hit the original high, we got a pullback. FXI was down 2 or 3% the next day. So I was selling up there, and then I bought those shares back when it came down, and now we're up to a slightly higher high. I'm selling those shares again. Not all of them, just a small portion, just touching it, just locking in some gains. And then if I can buy it back lower, great. If FXI goes higher, no big deal. I still got plenty of FXI, and I continue to do that. But we're getting really overbought here. So these volume buyers are monsters, meaning that everybody and their brother is buying China right now. So pretty soon, I would expect a pullback. And Alibaba's got more upside still. It's saying, 150. So it's still got a long way to go. But we are getting overbought there. I'm kind of employing the same strategy when we get big up days like we had this morning. I think it was up 2.5% or 3%. I sold a few shares. It's down on Monday. The Chinese market's been closed all week. So, you know, we're trading on I don't know what here in the US, but Monday, maybe China will say, sell off a little bit after being up 8% in one day and on before they close for the week. And that would give us a buying opportunity to buy those shares back at a lower price. So anyway, I hope you like the recommendations. Please like and subscribe right here. Um, uh, Thank you for watching Chart Built Wealth. I have some other things. I'm going to look for a low in the S&P next week, and we'll see if I can't come up with something else that might be really, really under the radar and that has huge upside. So have a great weekend. Good trading the rest of the day. Take care.